The portfolio enhancer allows for you to evaluate exactly what you have and then what your portfolio could look like if you enhanced it. The enhancer was designed to help people understand with a few minor tweaks how much better their portfolio could be. So what I've done is designed it so it's very easy to use, and we put in here $3 million. And we come down and put in what you typically or what you possibly have in your portfolio currently. So this is a very typical retail portfolio. Put in 5% in gold and 10% here. And again, this is a very typical retail portfolio. And don't worry about the names of the funds. Just put in the category, because that's all that really matters, because most funds trade about the same depending on the category. Most small cap value funds will return about the same, and same thing with financials and healthcare and so on. So the name of the fund doesn't really matter that much. And we'll do the same thing here with emerging markets. And again, this is a very typical retail portfolio. Then I hit save, and you have a current portfolio that historically has returned 7.71%, standard deviation of 13.2, a variance drag phantom tax, which is way above the 0.8 limit, what you should be shooting for. A Sharpe ratio is way below 1. The probability of any loss in the next 12 months is 27.95%. And at a $3 million, you have $688,000 at risk. But the most discouraging thing in this portfolio is your upper return and lower return is between 34 and 18 minus. So you have a very wide range, meaning that you have just as good a chance of making 34% in the next 12 months as you do losing 18%. So what we've designed is the opportunity to enhance the portfolio. And you can go in here and we can put in different portfolios or different enhancers, and we don't tell you what those enhancers are. That's why you have to come to us. But you hit save, and we put, let's say, 40% of your portfolio there, and then you can do a comparison of the two, and you can see that if you enhanced it with what we have as special investments, and we have about 18 different ones, your portfolio would have had a 15% rate of return with a standard deviation of 7, variance drag phantom tax well below the 0.8, your Sharpe ratio way above 1, your probability of any loss dropped to 2% versus 27.95, the amount of money at risk dropped, and your upper and lower return dramatically changed. That's just by adding 40% to the portfolio, and we enhanced it. And we can do this, you can even go ahead and make it, let's say we wanted to make it 60%. And that means taking your existing portfolio and changing it up to 60%. You can then see how much better the portfolio would have returned. And again, if you want to know more about the enhancers and how to tweak your portfolio to make it more efficient, just let us know.